Stocks closed strong on Wall Street with the S&P 500 and the Nasdaq gaining over 1% each. The indices closed lower for the week despite Friday's big up move. Asian markets have opened largely higher as well. The GIFT Nifty is also indicating a positive start for our own markets. Crude prices rise above $76 a barrel with Brent gaining over 3% last week on expectations of higher demand from China. The gold prices have slipped from a 3-week high. HDFC Bank's third quarter business update reflects slow loan growth as the focus remains on reducing the credit deposit ratio. Bajaj Finance's AUM growth remains robust even as the loan growth hits a 7-quarter low. IndusInd Bank's business update sees deposit growth at its weakest in the last 16 quarters. And today marks a record date for the ITC Hotels demerger. The restructuring will see ITC retain a 40% stake in the hotels business, while the remaining 60% will be held by shareholders. Kotak Mahindra Bank's Chief Operating Officer and Chief Technology Officer Milind Nagnur has resigned effective the 15th of February, citing personal reasons. The exit comes even as the RBI's tech embargo on the bank continues. Good morning. It's the first proper full week of 2025 and there is a lot, and I mean a lot, that you have to react to this morning. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Fatakia. Let's first quickly take a look at how the Asian markets are faring this morning. It's a largely positive start, but the pressure is coming in from Japan, where the Nikkei is down over 1%. They've resumed trading, mind you, after an entire week of a holiday, and the Kospi on the other side is trading with gains of over 1%. The Hang Seng is down around 0.3% as we speak. The Taiwanese index, though, is the outperformer with gains of over 2%. That pull up the GIFT Nifty, and that will give you an idea of how our own markets are likely to start off after Friday's negative session. The implied open, well, this is suggesting a 42-point uptick as we speak so far. So a positive start is what we are anticipating for our own markets, is what the implied open is suggesting as of now. But moving on to Wall Street then, where it was a positive session on Friday, the Dow gained around 350 points. Both the S&P 500 and the Nasdaq gained over 1%. In fact, the Nasdaq was an outperformer, gaining almost close to 2%. Both of them snapped a 5-day losing streak as well. But despite this move, the major averages were on the losing end for the week. But CNBC's Christina Parsons-Evolis gets us a wrap of all the action on Wall Street.
U.S. markets were higher across the major indices Friday as Wall Street recovered from a shaky start to the new year. The Dow up 340 points, the S&P 500 up 74, and the tech-heavy Nasdaq advancing about 341 points. President Biden officially blocked Nippon Steel's $15 billion takeover of U.S. Steel. In a statement defending the decision, Biden cited national security concerns, saying that the acquisition would place one of the largest U.S. steel producers under foreign control, while risking a critical supply chain. U.S. Steel shares ended the day down nearly 6%. Ford and General Motors posted their best new vehicle sales since 2019. General Motors remained the country's best-selling automaker, followed by Toyota and Ford. GM sold more than 2.7 million vehicles in 2024, which is up 4% from just a year prior. Those record sales were driven by increases across all 4 of its U.S. brands, along with a 50% jump in EV sales. For its part, Ford sold just over 2 million vehicles in 2024, with over 13% of those sales from EVs as well as hybrids. That's what's happening here in the United States. Back to you in Mumbai.
Well, now US President-elect Donald Trump is set to take oath in just 2 weeks' time, and here is what economists and market experts think would happen to policies under his presidency.
You know, we would still think that deregulation beneficiaries, there's going to be a flurry of activity from the new president regarding executive orders that will affect industries, the ability to build natural gas pipelines, natural gas exports, just simply not increasing the burden on the financial system again. These are things that are going to happen anyway. It's not going to change the directory of U.S. growth. We've seen a sharp pickup in small business sentiment. And of course, on the negative side, there is great tariff uncertainty.
I guess what continues to surprise me the most is how little Fed or FOMC members talk about some of the potential good things that may be on the horizon with policy changes, particularly related to deregulation. I hear a lot about tariffs. I hear a lot about immigration. I hear a lot about worries on fiscal policy or geopolitics and the like. But I think the biggest storyline, and we've been pushing this at Jefferies now for a very long time, the biggest difference between the two candidates going into the election and now with the Trump win, the biggest policy change is going to be deregulation. And I think the markets are reacting to that. The markets are embracing that. That's why we see resilience in the S&P. We had a pretty good 2024.
That's all the global market action. And how will all of these overnight cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in the news, and the setup on the FNO side as well. And first up, Vinny is joining in to get all the market cues we need to watch out for. Vinny, good morning. We gave up almost half of what we gained on Thursday, but what's the setup looking like this morning?
So seems like, muted start is what one could be watching out for today, because in terms of yesterday, Friday's trading session in US surely ended on the positive note. But like you were mentioning, in the Indian front and in the Indian markets, we saw a halt coming in the New Year rally on Friday. Nifty ended 184 points down. 24,000 is what it just managed to hold on to. Now, what was on the losing side on Friday was Wipro, TechM, so the IT names were in focus, where private banks like HDFC Bank, ICICI Bank among the top losers, and Adani Ports in the Nifty 50 top losers. Now, for the week, though, Nifty managed to see a rise of almost a percent. Mid-cap, small-cap, mid-cap specifically outperformed the benchmark indices, gaining nearly 2% for the week. So it'll be interesting to see how we see that move coming in from the broader market front, as well as where the Nifty is headed in today's trading session. Now, FIIs, they also actually saw a bit of a selling coming in on Friday. We saw 4,227 crores worth selling coming in from the FI side, while DLI managed to buy around 820 crores. Key factors that we're keeping an eye on, we had a whole host of updates that came in over the weekend. So individual stock moves on the back of that. IT earnings that will be starting this week. So Infosys, TCS, keep an eye out on that. And FII trends, how are they shaping up with the earnings season starting? Will that change their sentiment? And maybe a buy coming in from FIIs is something that is a key factor, as well as on the global front, the US job data is key one to watch out for this year to begin with. And Nifty implied open indicating a bit of a muted start. So keeping an eye out on the Indian markets as of now.
New year begins, as does the earnings season. Vinny, thanks a lot for that. Over to Abhishek now, who will list out the stocks that you need to watch. Plenty on his list today. Abhishek, good morning.
Well, yes, 21 lenders gave their business update from Friday post-market to Saturday night. To begin with, Dabur has given a Q3 business update. The company says rural consumption is resilient. General trade is still under pressure. Marico has also given their business update. They say that the sector witnessed steady demand and trends on the back of improving rural consumption and stable sentiment in the urban market. Now, Kotak Mahindra Bank, their CEO and CTO has resigned with effect from 15th of February 2025. Now, ICICI Bank, they have got a GST demand worth about 100.75 crores. SDFC Bank and their affiliates, that is the group members, have got permission to take up 9.5% stake each in AU Small Finance Bank and Capital SFB. Talking about Q3 FY25 business update, SDFC Bank, their loan growth has been weak as the concentration is on reducing the CD ratio. So advances growth is at 3% YOY and 0.9% sequentially. In this, the other wholesale book has actually declined by more than 10%. So sell down of loans impacting the loan growth this time around. Credit deposit ratio is well below the 100% mark and on towards their trajectory of 90%. Bajaj Finance AUM growth remains robust despite being at 7-quarter low run rate. So 28% growth YOY and about 6.5% sequentially. And their cross-sell rate has also improved to 7.25% versus 6.2% that they had in the previous quarter. Talking about other strong loan growth that we have seen from the business momentum, Bajaj Housing Finance, their AUM growth was 26% YOY and 5.5% sequentially. AU Small Finance Bank, their loan growth was more than 5% quarter on quarter. IDBI Bank, their loan growth was 18.2% YOY and 3% sequentially. UCO Bank, now that's a surprise list, growing at 16% YOY and about 5% sequentially. Bank of India, another surprise, more than 15% YOY and about 8.5% sequentially. In terms of soft or weak, business update coming in Q3, IndusInd Bank, their deposit growth on a YOY basis is the weakest in last 16 quarters, coming in at 11%, and it's down 0.75% quarter on quarter. It's the first time decline that you are seeing in their deposits on a sequential basis in last 19 quarters. Suryodaya Small Finance Bank, their asset quality has deteriorated massively. Gross NPA ratio has inched up to 5.5% from 2.9% in the previous quarter. Bandhan Bank, that's also facing a deposit crunch. their deposits have declined more than 1% quarter-on-quarter. L&T Finance, their rural business has taken a hit. So rural business finance disbursements are down 16% YY and more than 15% quarter-on-quarter. RBL Bank, that business momentum is one of the lowest that you are seeing in years. Deposit growth of 15% YY is at 9-quarter low, and loan growth of 13.3% is at 5-quarter low. Back to you.
It almost felt like that list was never ending, but Abhishek, thanks a lot for that. And now joining in with updates from the FNO space is the newest Papa Bear in town, Mangalam Malu. Mangalam, welcome back and many congratulations to you first up. You know, we gave up, we're still at that crucial 24,000 mark, right? What's the setup on the FNO side looking like?
Thank you so much. I'd like to believe I'm a Papa Bull more than a Papa Bear, but be that as it may, thank you so much for your wishes, Hormaz. Yes, the GIFT Nifty is indicating a positive start. We held on to that 24,000 mark. That tells you that maybe the range that we were trading at has moved a little higher. What's interesting, however, is that there is still volatility in that range. You know, if you look at the Nifty moves over the last 3 trading sessions, I'll be looking at them just to, apprise myself of what the market has been doing over the last 2 weeks. 98 points higher on Wednesday, 445 points higher on Thursday, and then a 200-point decline that we saw on Friday itself. But between December 31st low and Jan 2nd high, we actually saw a rally of over 750 points. So I was just trying to understand what exactly took place out there. The rally, of course, was led by strong auto sales and FII short covering on Thursday, which was the weekly options expiry day. But then came the draggers on Friday, which was HDFC Bank and the IT stocks. And both of them in focus. IT stocks ahead of big earnings right now, and HDFC Bank ahead of their Q3 update that Abhishek just spoke about. The other couple of factors that are playing out, the FIIs, they sold on Wednesday, bought on Thursday, sold again on Friday, 4,200 odd crores. And even in index futures, the short covering was not long lasting apart from Thursday, because on Friday they sold about 2,000 odd crores and added 23,000 shorts back again. So if you look at the FII exposure in index futures, which started with a negative 2.34 lakh on Jan 1, is now back to negative 2.3 lakh itself, and long exposure from 14% moved to 20% and now back to 17% itself. What does all of this mean? It means that the Nifty may trade in a range, but if it were to break out of that range, the street is positioned for that as well. 24,100 call is fairly active for a premium of 112 rupees, and 24,000 put also active for a premium of 150 rupees. That tells you that the range could be 23,800 to 24,200. But if we were to break out or break down of that range, there has been positions taken at the 24,500 call and the 23,600 put as well. So those are a couple of levels we'll keep an eye out on. From a technical standpoint, definitely watching out for the 200-day moving average as the first support, 23,900 that is. And on the way up, the Nifty does congest around that 24,150 mark, largely because of the 20-day moving average and the 50-day moving average. Were we to cross that, maybe a dash towards that 24,500 mark.
Oh, we'll anticipate that for sure. Mangalam, thanks a lot for that. Time for a short break. More lined up on the other side. Stay tuned. Welcome back. Now, post the release of the new draft data protection rules, IT Minister Ashwini Vaishnaw spoke to CNBC TV 18 on how the rules attempt to strike a balance between industry and user rights. Now, he began by answering why the draft rules were delayed for 16 months and what stands ahead.
When this law was presented to the Parliament in November 2023, we had very clearly promised that it will be digital implementation. Sure. It will be completely digital by design. So in the last 1 year or so, despite the elections being there, general elections being there, we have worked very meticulously to create a completely digital portal, digital workflow, digital processes, so that when we finally start implementing this law, the entire data protection board will be fully digital by design first. Second, as you are aware, this is a very pragmatic approach towards data protection, and we have made sure that the balance between innovation and regulation, we have a huge innovation economy, right? Huge, large innovation startup ecosystem. Right. And we have to make sure that citizens' rights are protected with full fervor, full confidence. So that's why we have created this structure where the innovation and regulation is properly balanced.
So let's take this next logical question in terms of what does this do as far as obligations of data fiduciaries or companies collecting data is concerned? What does it mean for them? What are the obligations they're now looking at?
The obligations on the data fiduciaries are very well established as per the principles set out in the Honorable Supreme Court's judgment regarding consent, regarding purpose. All those obligations are properly set in the law, and the rules basically implement those.
Sure.
Like the law, the rules are also very simple in language, very clear examples, illustrations are given everywhere. We have made sure that, as I said, in a very pragmatic way, we have made sure that we have not made everything very prescriptive. We have kept, because digital technology doesn't stand, right? It evolves every week. Every week there is a new thing which happens. So the law should be able to catch up with those developments.
That was the IT Minister, Ashwini Vaishnav. Time for a short break. More on the cues from the commodities side. Next up, stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. But the crude prices, though slowly but surely, are grinding higher.
Oh, well, absolutely. If you look at the previous week, we've seen the crude oil prices gain up between 3 to 4%, and that's the first week of 2025. The prices currently at 76 plus kind of levels are trading at a 2-month highs. Well, there are three factors which are supportive. One, it's cold weather in US and Europe, and the markets are looking at increased demand. Second is the expectation that you will see strong China economic stimulus measures coming in. Third, the markets really are waiting with abated breath for 20th of January on what really will conspire as Trump takes office there. And then the markets also are looking at geopolitical tensions with Russia halting gas pipeline exports through Ukraine. The markets also are reacting to the Chinese PMI data, slightly on the weaker side, and that perhaps is weighing on. But even with the dollar index trading at a 2-year highs, you still are looking at the crude oil prices trading firm. That's exactly the scenario that you've seen within copper in the metal as a sector. While all of the base metal prices have started Asia slightly on a weaker note, copper prices, after that 10% decline in the last quarter of 2024, have started 2025 on a positive note. So we are up by 1% in this year already now, and some more buying is what I can see in Asia.
Manisha, thanks a lot for that update. Now, today also marks the record date for the ITC Hotels demerger. The restructuring will see ITC retain a 40% stake in the hotels business, while the remaining 60% will be held by shareholders. Manglam is back with us for more on this. Manglam.
Good morning. So, if you look at ITC, July 2023 was when this structure was announced. So, to jog your memory, the structure meant that ITC would have 40% stake directly, 60% would be given to shareholders in the alternate structure, and importantly, this entitlement ratio is 1 ITC hotel share for every 10 ITC shares that you own. How big is ITC Hotels as a percentage of ITC's overall business? They contribute about 4% of revenue, close to 2.5% of operating profit, but more importantly, 14% of total assets. What this basically means is that the demerger is ROCE accretive for ITC's current business, and for the hotel business, which is resultant, let's talk about that as well. They have currently about close to 140 hotels with 13,000 keys. 55% of their business is managed hotels, and FY24 occupancy was close to around 69% as well. And the 2030 stated target that they have is close to 200 plus hotels with 18,000 keys and 65% salience coming in from managed portfolio. If you look at the financials for the last financial year, the revenues were close to 3,000 crores, 1,000 crore EBIT, and they do have 33% of EBITDA margins as well. For the first half of this year itself, the revenue has been close to around 1,500 crores with 28% margins. Nearly 40% of their revenue comes in from F&B, 50% comes in from room itself. If you look at the opportunity that they have, it's a zero debt company, 1,500 crore cash. 20% of its inventory is operating at 75% of potential occupancy, and the capex is estimated at around 8 to 10% of their revenue. The big question, how do you value this company? Let's look at the assumptions. We're assuming close to 3,700 crore on the top line this financial year, 4,400 crore next year with 1,450 crore at EBITDA. And if you look at the listed hotel companies, they're trading anywhere between 17 to 37 times. My sense is that ITC would settle between Indian Hotels and Chalet Hotels, somewhere between 26 to 28 times. That values the company between 36,000 to 39,000 crore. But remember, 40% of this is held by ITC, on which there would be a holding company discount. The residual stake would be valued at around 22,000 rupees. So the value of ITC Hotels share would be 170 to 190 rupees the day it lists. But today what happens, of ITC, around 15 to 20 rupees gets shaved off as the business goes ex-hotel demerger.
Indeed, Mangalam, thanks a lot for that explainer on ITC and its demerger of the hotels business. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for the day ahead.